want to understand the long-term perspective on it.
Okay, interesting. And when did you buy this? Can you help me with the time that you bought this?
So I was actually doing average from last 5, 6 months, I can say.
Okay, and your intention is to hold this for the long term, Naveen. How do you define that?
Yeah, intention is to hold for the long time.
Okay, understood. Okay, so interesting name. In fact, we were speaking about this in the newsroom just before the show. Shaina, I'm coming back to you on this one because gold prices have gone up quite substantially. Of course, there's other factors playing for Manappuram as we speak right now, but on the fundamentals, gold prices going up means that the loan to value for these companies goes up, and so the potential for credit offtake also goes up. What's the view here? Would you hold for the long term?
Yeah, the stock looks very interesting actually for the long term. It's gone through a good corrective phase. This is based on a lot of negative news that had hit the stock in the last 6 months. RBI also had put restrictions on its subsidiary, but all these things I believe are more or less behind it. In terms of valuation, if you look, it is actually much cheaper than its closest competitor in gold loan in the space, and I think valuations are very attractive at current levels. It's slightly riskier than Manappuram. It's slightly riskier than Muthoot, but I think to an extent, 1.4 times price to book is very interesting. So it's a hold. You can hold it. I believe from here on, you can even get a price of something close to about 265 if you're holding it for a year.
Interesting. All right. And by the way, what I didn't recall, and what is playing on your screen is that there is a board meeting that is set up on the 20th, that is today, to consider fundraising. Of course, that fundraising could be through various means, either an equity issue or convertible warrants or even debt security. So generally, how that happens is that an overarching approval is taken from the board, and then you could see announcements subsequently. But of course, that's one more reason why the stock is in focus. We've got Kalatinathan, who is writing in and asking about Oil India. He's bought the stock at levels of 475. And he's wondering what to do. He's not given us a time frame. He's asking hold or sell. Kush, first question to you. What's the view on Oil India?
Hi, morning Alex, morning China. Well, not too encouraging. I mean, the entire pack hasn't really done all that well in the last couple of months. I mean, the fall started slightly before the rest of the market. While some recovery is underway from long-term support zones of 340, I'm not sure if it has enough and more room to go to his buying price. But yes, for now, if this momentum does continue, then the stock could head to 415 levels once that is taken out, perhaps even a 450 as well. But there and thereabouts, at the given levels, I would start to exit the positions, go light on whatever my holdings are. Not sure if the entire, rally of about 800 level can be seen anytime soon.
All right, so that's the view on Oil India. And by the way, oil sensitives reacting and have been reacting because oil prices as a whole have been fluctuating. Currently around $70, $71 for the Brent crude. It's not moved too substantially in the recent past. But Shankar is calling us from Chennai. Hi Shankar, good morning. And how can we help you today?
Hello sir, how are you?
Very well, please go ahead.
Sir, actually I bought 700 shares Go Snacks 4 months back.
Okay.
My aim is just done to 15% profit only. But suddenly it down.
Yeah, it went lower.
What can I do?
Correct. So
cut loss, book loss, or wait.
Okay, Shankar.
Long-term outlook is good. I'm ready to wait.
Okay. So Shankar, you've told me what your expectation is, that you want 10 to 15% only, but you haven't told me in what time frame you expect this. In how much time? Okay. I think we've lost him. But so is an interesting question because he's identified, Shahina, how much he expects from the stock, but he's not defined his time frame. And so he's looking at the long-term prospects. He's saying that if it's good in the long term, he's willing to hold. What would you say? He's bought at levels of 324.
Yeah, after this huge correction that we've seen, there is a small bounce back. I think he should exit in this bounce, because if you see the numbers, they have actually shown a deterioration in the last quarter, expected to continue on even for the March quarter. It's a small cap. I believe valuation is also very expensive. So he should take any bounce that he gets now and exit.
Any
Book his
bounce,
loss.
yeah, book your losses and take any bounce that you can get in Gopal Snacks. It has lost quite a considerable amount of value, and you unfortunately caught the decline. Markets as a whole over the last 5 months have dropped quite substantially, and while some stocks have made a recovery, this is not one of them. All right, let's take the next question, and this one's from Varun. And he says that he's looking at buying banking stocks for 2 years time frame, and he wants to deploy as much as 2 lakhs. He's bought HDFC Bank at a price of 1640, and he's got 183 shares, and so he's making a sizable profit right now. He wants to buy more of banking stocks, not necessarily only HDFC Bank, for a period of 2 years. Kush, there are a few interesting names that have moved this week, not least to which ICICI Bank earlier in the week, and you also have Shriram Finance that is moving quite sharply. Anything that stands out to you in the banking space that you would buy for a 2-year time frame?
From a 2-year time frame, the idea is to have a mix of momentum and strength. As far as, or rather a strong risk reward ratio. So something like an ICICI Bank, which has already moved quite a bit, but still has the kind of potential to go higher to about 1500 levels from here on, is what I would suggest. And on the flip side, you've got SBI. Now this stock has already seen a bit of a correction. It's now making that comeback. The risk reward ratio on this one is extremely favorable. I wouldn't rule out a move up until the previous swing highs of 900 on this one in the coming 2 years time frame, maybe a little more than that as well. So if I had that kind of dough, I would deploy partly in ICICI Bank and then the remaining in SBI. So I would split it across these. I wouldn't really venture into the smaller names just yet.
Okay, wouldn't venture into the smaller names in the banking space. Hope that answers your question. Mahesh is calling us from Andhra Pradesh. Good morning, Mahesh. How can we help you today?
Good morning, sir.
Good morning.
I am fan of your channel.
Okay.
You and Kush are laughing always. Very fine.
I'm glad to hear that. Yeah, we try to keep a smile on our face. That's the way. That's the way to do it. And I can hear that you're laughing as well, Mahesh. So it's a good thing.
I want to know about the Symphony, sir.
All right. Okay. So what about Symphony?
I bought it 1170.
Okay.
Symphony, yeah.
Yeah, please go ahead. You bought it 1170.
I bought it. Yeah, 100 shares. 100 shares.
Yes. But what is your time frame? Do you have a long-term view or a short-term view?
Summer season.
Got it. Okay, so you want to hold for the summer.
Only for summer.
Okay. So Kush, what's the view on Symphony Limited? It's obviously a seasonal play that he's trying to have. It's manufacturer, of course, of industrial air coolers in the domestic and international market. He's looking for the summer to add a fillip to the sales and therefore maybe the stock price as well. And he's also appreciating your smile and your laugh. So there's that as a bonus. Would you hold on to this?
I suppose it's the energy that you and team bring, plus callers like Mahesh that bring that smile on our face, and probably widen that that much more. So Mahesh, thank you so much for all the compliments, and Alex, I think a compliment to you too for putting such a fantastic show together every time. As far as Symphony goes, I think for now the stock's already seen a bit of a run up. The momentum indicators and the levels are indicating that there could be resistance around the 1200 mark. For Mahesh, my suggestion would be his intention is absolutely spot on. That from a summer perspective, Symphony does make a sensible buy, but I would keep my stop loss near the 1120 mark. If that is broken, I would get out of it. On the upside, the two targets for him are 1200. If that is taken out, you're looking at 1245 as well. So keep those as your targets. But I would also suggest that if he has some more capital to deploy, then he should also consider something like a Blue Star or Voltas, which has already shown some run-up, but seems slightly stronger than Symphony. So 1120 as the stop loss for Symphony. We could book profits around the 1200, 1245 mark.
Yeah, interesting. And incidentally, a few updates on the back of an analyst meet coming through for Voltas. Pull up that stock and see. Let's see what the reaction today is, because you've had slightly differing views. The management, of course, coming out and saying that it's not too concerned about the cost of certain inputs, among them compressors, which have been going up, and it's focused on growth. Its focus is on growth. So the interpretation of that, of course, is that they're not too concerned with the headwinds of the margin compression that you've seen over the past couple of quarters. Quick view on this one, Shaina. Would you say on the fundamentals also that you would look at Voltas, or would you prefer another stock?
The Voltas definitely looks better than Symphony at current levels. At the same time, I would say both are better to avoid as of now, because summer is now, we are in the midst of summer already. And I think whoever wanted to buy would have probably bought. So there is a slowdown. Symphony actually is doing much worse than Voltas, even in terms of profitability. At least Voltas is retaining its profitability, but valuations are expensive. So I think it is, if you want to pick one of the two, Voltas would be a better bet. Symphony, in my view, is an avoid, or in fact, even exit.
What about a Blue Star then?
Blue Star is also, it's reasonably priced, comparable to Voltas. So you could also go in for a Blue Star actually. In terms of cost, I think all of them are going to see some bit of pressure, because imports from China are going to be a bit of an issue. Important components. So I think this sector is going to see a little bit of tough phase for the next couple of months. So maybe you can relook at this sector, say 6 months down the line.
6 months down the line. All right. There's a question coming on Wonderla Holidays, and I must admit, it's not a stock that I look at very often. Parag Visaria is writing in from Mumbai and asking about whether or not this is the right level to accumulate the stock. It's currently trading at 661, just about flat in trade.
Not too sure, Alex. The stock's seen a bit of a correction. The only recovery that you're seeing is, along with the markets, and that too not a very strong and a meaningful one at that. While it is above the 20-day moving average, it's finding some difficulty to, sustain at those levels. So I wouldn't really recommend a big trade on this one. But given that the query is very specific on this stock, I'm assuming he would have done some homework. So just some levels for him to go with. 630 is a good support zone. So if you do consider an entry, then that should be your stop loss. On the way up, you're looking at targets of 710, and once that is taken out, 740 as well. But as I said, I wouldn't take a big trade into this one. Hasn't really been an investor favorite, since listing. And even now, the momentum isn't really all that great. But since you've done your homework and you've got a specific query, those are your levels.
Okay, all right. So that's a view on Wonderla Holidays. We've got a question on Aarti Drugs, and Sharat is calling us from Bengaluru. Hi, Sharat. How can we help you today?
Yeah, hi. So I have purchased Aarti Drugs post-COVID times. So I try to average at multiple instances. So currently I have a stock around 1,100 shares at 640 average. Currently I'm at a loss of around 3 lakhs. I am ready for a long term, but I am a little scared to whether should I average it now or what should be my strategy going forward.
Yeah, okay. So, and this is, you basically bought it when, if I'm not mistaken, the overarching conversation and the narrative was very strong for the API manufacturers, right?
Yes.
Active pharmaceutical ingredients. So okay. So it's a fair question. I'm going to take this to Shahina on the fundamentals, because in the pharmaceutical space, Shahina, the pack is interesting, of course, and where the latest update is that it's unlikely that the tariff tantrums, if you can call it that, are going to severely impact these group of stocks. At least it's not going to change things very dramatically. Pricing issues continue, but it's not going to be easy for the US to switch manufacturers or capacity very quickly from the current suppliers, for generics at least. And so generic manufacturers, CDMO is looking okay. But what about APIs, and what specifically about Aarti Drugs?
I totally agree with you, Alex. It is not very easy for, either to get new supplies for intermediates, pesticides, agrochemicals, generics, pharmaceuticals also. So I think the tariffs, if any, and which will come, will be largely passed on. So I think the US, the consumers will have to absorb a lot of this. At the same time, I think there is going to be an issue with what China is going to do versus dumping whatever excess they have, because they are going to be hit more badly in terms of tariffs. So really, the whole world order seems to be changing, and I think chemicals is going to be one space which is going to continue to be affected. Having said that, I think Aarti has corrected a lot. I would not advise any averaging, though it has corrected even at current levels. Please wait, maybe 300 levels you could look to again average, but not as of now. I would just hold it in fact with a stop loss also, and hold it for the medium to longer term and see how it works out.
Ask you this then, as an alternative strategy, is there another play in the pharmaceutical space, in the broader pharmaceutical space, that you would suggest instead of Aarti Drugs, where you can take this capital and you can deploy there for the hope of a better appreciation?
Yeah, I would think so. I think some of the large pharmaceutical stocks are better placed to actually pass on the tariffs to consumers, and especially if you have in specialty pharmaceuticals. So there, I would say Dr. Reddy in terms of valuation also looks good. You have Biocon, which has good approvals that have come, and that largely will be able to absorb, pass on the tariffs if any. You have Cipla, which is doing actually well and likely to continue to do decently well over the next couple of quarters. And you have Arbindo. So there's such a lot of stocks that you have in the pharma space. So it is better to be in that space rather than be in the API space.
So then, two options available, of course, are incremental investments he can make into these stocks, or China he can shift out of and book a loss in his holding. I would think it's a long-term loss, and so therefore he can set that off against future gains as well. Should he do the second or the first? Which would you suggest? Which would you do? Which would you do?
Yeah, I would say I would book the loss, set it off. You have the tax planning available for this year, and invest in some good pharmaceutical stock. I've mentioned all four look interesting, and hold it for the medium to longer term.
Okay, great. All right. So that's advice, Sharath. I hope that helps you out. And it's not, of course, easy advice to dispense. It's not easy advice to take either. It's a bitter pill to swallow. Let's get Devendra on board. Devendra is calling us from Bengaluru. Hi, Devendra. How can we help you today?
Hello. So I have a doubt on this Tejas network.
Okay.
So I want to know, what should I do now? Because it's been so long, and out of nowhere, the stock fell 44%.
Yeah.
I want some advice on that.
Okay, understood. And you bought at levels of 1,292.
Yes, sir.
I'm just trying to pull up the 52-week high if I can. If I'm not mistaken, you bought very close to that value, to the high point, right? So you've actually bought at the high. What is the time frame that you have, Devendra?
I can hold it for 1 more year, I guess.
Okay, you can hold it for a year. Kush, on the charts then, we're looking at a 1 year time frame, 710, chances of recovering and hitting that 1300 mark. First of all, that, and as an alternative, would you book this and move to something else as a better opportunity?
So, Alex, I mean, sometimes, as the saying goes, the higher they go, the harder they fall. I mean, if you recall the movement in Tejas Networks, was similar on the way up as well. So March of 2024, the stock was at 650 levels, and then end of April, the stock was close to about 1200 levels. So near 92%, 100% rise in 2 month time frame. That's the kind of move that it, but then it went further higher from there on as well. Now the stock is close to that 52-week low level. This is a good long-term support zone for the stock. So I would actually have a stop loss near that 650 mark. If that is broken, then whatever gains have been made over the last year or so will be wiped out entirely. If you look at the near-term structure, then yes, the stock is attempting a base formation. It is attempting a recovery from oversold territory. So while those 1250, 1300 levels might seem distant, I wouldn't rule out a bump up from here to levels of 850 and post that perhaps even 975. I would continue to hold on to this one, especially given that its time frame is a year.
All right, hold on is a view from Kush. Jyoti Labs, we've spoken about the pharmaceutical space, but this is specifically a question on Jyoti Labs, and Joby Sebastian is asking this question. He's writing in from Bengaluru. He's bought at a price of 460. Stock is currently at 337 or thereabouts. He's got a 3-year time frame. What's the view, Shaina?
Well, I would say Jyoti Labs he can hold as of now. It looks like, it can remain in this corrective consolidation phase for some more time. But I think in terms of performance, in terms of numbers, it's starting to look better. So last quarter, of course, was pretty disappointing. So I would suggest it's a hold.
Hold, all right, hold is a view. We have to take a very quick break. Guys, do stay with us, and viewers, we'll be back on the other side to take more of your questions. So do stay tuned.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
we have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was.
Welcome back. You're watching Ask Profit, and we've got our first caller on this side of the break. Ganesh is calling us from Chennai. Hi, Ganesh. I believe you'd like to talk to us about Orient Technologies, right?
Yes, correct. Orient Technologies. I'm holding about 130 shares.
Okay.
I purchased at the price of 350.
Okay.
It went beyond 600. Then again it dropped down. Now it's about 320. So should I hold it, or I can sell it? Now my losses are on 3,000 rupees.
Yes. Can you help me with the reason why you picked this stock? It's a small, very small company in the larger scheme of things. 1,400 crore market capitalization or thereabouts. What stood out to you?
No, actually I just checked some of the YouTube channels, and everyone suggested that its company is making consistent profit over the years. So. When I applied for IPO, I did not get it. So after that, I purchased it. So
understood. Okay, so you bought it based on what you saw on social media. Did you?
Social media, correct.
Yeah,
correct.
But did you look at the company at all? Did you study the fundamentals?
I checked it. I was not convinced with this thing.
Yeah.
But based on the social media result, I went ahead and purchased. That's why I purchased very less stock, just 130 that I purchased.
Got it. Since you bought on the fundamentals, Ganesh, a good thumb rule would be to invest in businesses that you understand. Or it's good to study the company as well. But I will let Shahina explain to you what you should watch out for if she has looked at Orient Tech at all. Shahina, what would you say?
Well, I've not really looked at it in depth. Of course, as you mentioned, it's a very small cap company. I just briefly looked at the valuations, which are pretty expensive. And being a new issue, I think it was October, September. So this will actually, being a small cap, being more expensive than the peer group in terms of valuation, you are likely to see a lot of volatility in selling, with initial investors selling, over a year's time. So I would say if you're making money, then it is better to switch. I really didn't get his buy price.
The buy price was 350 or thereabouts, I think. Yeah.
Yeah, so I don't think it's it's advisable to stay in a small cap in this volatile market since IT space. It's better to switch to some large cap if possible. It is more safer.
All right. So that's a view. Ganesh, I hope that answers your question, and it's a good idea to maybe book out because, like you pointed out, you've taken a very small exposure, and so you can kind of get out unscathed. Relatively so, right? So let's take the next question. We've got several that have come through on WhatsApp, and the one that I'll take is Dixon Tech, where Sumit from Bengaluru has invested and he's been holding for the last 6 to 8 months, I believe. He's bought at levels of 17,800, so he's seeing a significant loss. He's wondering whether to hold till April to May and whether he can recover some of his losses. What are the prospects, Kush, on the charts?
Well, I think with the kind of fall that the stock has seen, and now the consolidation, I think somewhere the fall has now come to a halt, which to begin with is a good sign. Now a couple of things are happening. One, the stock is facing a resistance around the 200-day moving average, close to the 14,200, 14,300 mark, and also the volumes on the way up haven't really been as encouraging to suggest that the momentum is starting to build in Dixon or perhaps some of the peers. So my suggestion would be to, no matter how deep the loss is right now, still hold it, but with a stop loss around the 13,000 mark, or the low that it had recently made, close to that level. On the way up, the stock will first actually face resistance around the 14,250, 14,300 level, where the 200-day moving average is. But if that is taken out, you could see a good 1,000-point up move near the 15,200 mark. The 17,000 plus kind of buy price that he has by April, May could be a bit of a stretch, but given the kind of upswing that the stock is starting to see, momentum could build into this one. So I would hold, but with a stop loss around the 13,000 mark.
Hold with a stop loss, and maybe you might have to widen your time horizon a little bit if you are to recover. Would you suggest that as well? Quick answer, Kush.
Yes.
Okay. All right. So bear that in mind. Those are the key levels, and it's a significant loss. So you might have to widen your time horizon. Kamath is calling us from Bengaluru as well. Hi, Kamath. Good morning. How can we help you today?
Good morning, sir.
Please go ahead. Good morning.
Sir, I have 1,000 shares of BPL at the rate of 135.
Okay.
I wanted short term and long term.
Okay. So you bought it at 135. The stock is currently trading at 109. You bought it based on the fundamentals, Kamath?
Yes, sir. Yes, sir.
Okay. So, Shaina, on the fundamentals, then the shorter term prospects of Bansali Engineering polymer, would you hold on if you bought at levels of 135? And what are the long term prospects?
Well, I think he should hold on. He can hold on because I think the numbers should be pretty decent even for the March quarter. They are reporting a bit of flat numbers, but I think it should be decent. Balance sheet is pretty strong, so he can hold.
Okay, all right. So that's a view here. Let's take a question from Vijay Kirti, who's writing in from Tamil Nadu. He admits that he is aware that Kush is not a fan of the averaging strategy, so he's asking what the strategy should be. In the case of Spandana Spurti, where he's bought at a price of 1,045 and he's looking to hold for now, but he's asking whether he should sell, average or hold right now. He's incurring a loss of close to 80,000 rupees because he's bought at levels of 1,045. The stock is currently trading at just above 700 if I'm not mistaken. What's the view, Kush?
Spandana Spurti, Alex, right?
Yes. Oh, 250. Sorry, my bad.
Yeah. Just got me mixed up for a second there.
Yeah.
First, I'm glad that the no averaging theory is starting to stick. There are very specific cases when you should average. This is not one of them. Spandana Spurti is not one of them. But I also want to admit one more thing, that the other theories that we've discussed, which I always refer to as God's gift to mankind, are stop losses. Now it's a little too late in the day for him to apply a stop loss on something like a Spandana Spurti. There are some green shoots, but I don't think he would be seeing his buy price anytime soon, or maybe in the coming few years. My suggestion would be to start exiting at any kind of a 5, 10, 15% bounce that he sees on Spandana Spurti. So yeah, the first thing would be from what is done, but going forward, it'll be a good idea to have a stop loss in mind before you enter the trade, and exit as soon as the stop loss is hit. And for now, Spandana Spurti is an exit. He could start exiting now, and maybe in parts, as I said, when the stock starts to bump up by 5, 10, maybe 15% or so.
Okay. All right. So exit on any bounce that you see in the stock. Shweta is calling us from I don't know where actually. Why don't I ask her? Shweta, hi. Good morning. Where are you calling us from?
Hi, Alex. I'm calling from Hyderabad.
Okay.
I hope Mahima is feeling okay.
Yeah, she's feeling better now, but then I don't want to strain her voice. She's got a cough, and so I'm asking her not to speak. Maybe she'll be back tomorrow. But what's your question?
My question is, Alex, I have Garden Reach and Zen Technologies. Both are at 30% loss at present.
Okay.
I want to exit from one stock and I want to put the money in the other stock. So which one would be better among these two?
Interesting. And you've seen, and so this is a 30% loss despite the kind of run up that you've seen over the last couple of days, right?
Yeah.
Okay. So, and are you willing to hold for the long term?
Yeah, no problem. I can hold it for long.
Okay. First of all, thank you so much for your concern, and I will pass on the word to Mahima as well. And let me go across to Shahina on this one. Shahina, Garden Reach Shipbuilders, and she's got Zentech. I do not know the buy price for Zentech, but she's wondering which to hold. She wants to sell one and buy the other. Garden Reach, she shared her buy price 2,557. So both she's incurring a significant loss. What should she do?
See, I would first start with Zentech in defense, and the long term, they've got huge order book, very good technology, so they will do well in the very long term. As of now, it is very expensive. On the other hand, Garden Reach is doing much better and likely to show a better performance in the medium term also. So, if you want to hold one and exit one, I would hold Garden Reach as of now and exit Zen. But maybe at a later stage, you can relook at corrections to re-enter Zen.
All right. And bear in mind that technical advisors have also pointed to maybe Garden Reach, the kind of run-up that you've seen, maybe it might falter a little. Kush, I want to check with you because it's seen a very sharp move in a very short period of time. Is that something to bear in mind as well?
So, firstly, Alex, I do concur with China. Not a bad idea to stay with Garden Reach and perhaps exit, Zentech for now. And I also agree with the idea that yes, Garden Reach indeed has actually overshot, or gone into, deep overbought territory. So could see a bit of a pullback. But since the view is a year, perhaps slightly longer, then not a bad idea to continue holding on to Garden Reach. Perhaps shift the Zentech investment also here.
Got it. Decline. All right. So a consensus view here on the question that Shweta had for us. Delivery is a counter that we're looking at next, and a 3-year time frame is being asked about. We've got Mohit from Ludhiana, who's bought at price of 280. So he's seeing a small loss here. The stock is currently trading at 260 or thereabouts. On the fundamentals, would you hold this? It's a play on the warehousing logistics space, right? So Shaina, would you hold on?
Yeah, it looks like you can hold on at current levels. Valuations, like the rest of the stocks in this space are a bit on the higher side, but after the correction, I think, and the number of the expansion that they're talking about, the expansion in earnings, I think it is a good hold from current levels for the medium to longer term.
Okay. Just to follow up, and since I didn't ask this, I'm going to ask you, Kush. Vijay Kirti, you gave him advice on Spandana Spurti to sell on rise. Would you suggest another stock that he can get into as an alternative?
So, Alex, there are a couple of stocks that he could for sure get into. If you're looking at something more stable, something more steady, I wouldn't rule out something like a Geo Finance. The stock's actually corrected quite a bit, and starting to see some consolidation, some uptick. That's again for the long term. One stock which has already run up quite a bit, but still has a lot of potential, and we've discussed this time and again on the channel, is Narana Hrudayalaya. Today also, if you see, the stock is actually up about 3.5-4%. So these are some of the stocks which have something going for them. So these are the stocks that I would recommend that you want to get into and hold on to from a medium to a long term perspective. So Narana Hrudayalaya and Geo Finance.
So there are a few people asking about this averaging strategy, right, Kush? So I want you to clarify. You say that it's not a good idea to average on the way down. Maybe a better strategy would be to average on the way up, because and I want you to make that clarification because we've got a question from Ramya, who's writing in from Chennai, and she's saying, since he's always saying no to average stocks, what if I want to average a good stock on the way up? ITC is what she's talking about. She's bought at levels of 30, she's bought 30 shares 3 years ago, and she's wondering whether to average on the upside. So what should you do?
Fantastic question, Raman. I'm glad, Alex, that these just keep coming up, because this is a very common mistake traders and investors across the board tend to make. Let me give you a rule of thumb as to how do you resolve this averaging conflict. Just for a minute, assume that you don't hold that share and think about it. Is this price and is this time and the money that I'm deploying right now, is this a good time and a good price for me to deploy this capital right now into this stock? If the answer to that is yes, please by all means go ahead and buy that stock. The averaging then happens as as a default. It's not something. The reason I say no to averaging is because a lot of people do it because of the ego and not because of what the share price is doing. Sometimes when you make a loss, you want to just perhaps protect and give yourself that extra chance, and then you go out and put some good money behind bad money, and that's when you end up losing a lot more, right? That is why averaging from an emotional standpoint is a no-no. But as I said, if you want to buy something at this price and it still looks good, irrespective of whether you hold it or not, that's when you average. So just to come back to her question, ITC at this price, would I recommend a fresh buy? Yes, from a medium to a long-term perspective, the stock's already seen a goodish bit of correction, about 20% or so. So this is a good time to buy ITC and hold from a medium to a long-term perspective. Now, if she's holding it from 200 levels, just hypothetically, and it's 400 now, it's a automatic averaging on the way up and not something that she's doing, right? So that's the rule of thumb. Does it make sense to buy this stock right now at this price? Go by that. If the answer is yes, by all means, go ahead.
Okay, all right. So that's the view on ITC as well, and also the strategy that you should consider employing when you're looking to add on to your positions in stocks. Amrita is calling us from Kolkata. Hi, Amrita. Good morning to you, and thanks so much for calling us. How can we help you today?
Hello.
Yes, please go ahead, Amrita.
Yeah, I have some share of Geno Power Infrastructure.
Okay.
And I have brought it at 416.85 and 200 share, and now it is 270. So I have a loss of 29,560.
Right.
So should I invest more to average it down if I see any future in the short term, or I will hold it?
Okay, so I think you haven't had the benefit of what we've been speaking about in the time so far. I would encourage you to go back and watch what we were discussing just before this question. It's now 11:15, and on YouTube you should be able to see this, and you should scroll back and see what we've been talking about. I won't take more time to talk about the averaging strategy, but on the fundamentals, let me go to Shahina on this one. Genius Power, bottle levels of 416. Would you hold on? Would you buy more at the current level?
I would hold on because the numbers are going to look more and more interesting and attractive going forward. Balance sheet is strong. Valuations are a bit on the expensive side even now at current levels. So one can see a bit of further consolidation. But they are in the meters, where I think they are going to get a lot of orders. They have already got some orders, and they are likely to get some more orders in the prepaid meter business. So I think it's a hold from here. The business is very interesting.
Okay, interesting. Genius Power is interesting. So hold on is the view from Shahina on the fundamentals. The next question is going to put a smile on the face of Kush, I'm sure, because it's certainly quite an impressive achievement. HAL is the name of the counter, and we've got Venkat from Andhra Pradesh, who's bought 8,000 shares at a price of 3,608, and so the gain that he's making is 13 lakhs. He's wondering whether to exit at this juncture or hold for another 6 months for potential upside. Kush, what's the view?
First up, kudos on buying, at this price and the kind of quantity. My suggestion would be continue to hold on. The entire pack is now starting to see some kind of, an activity on the way up. So definitely there is some traction. EEL, HAL, these are the stocks that continue to, impress us on the upside. Now, since we've discussed a lot about averaging, way down, way up, I won't get into that, but I will give you one more very interesting nugget, which is trailing stop losses, right? So now what you should do is keep your buying price as your trailing stop loss. In case the stock falls, there's a possibility, or in that case, you will at least exit at a no profit, no loss scenario. You for sure won't incur a loss, right? So continue to hold with a trailing stop loss. Now, as far as levels go, I think the momentum is now starting to pick up on HAL. I wouldn't rule out the move up until 3,900, and if that is taken out, you're looking at a 4,050 kind of zone also. I'm not going to give him a stop loss based on technicals just yet. It's more of a trading strategy now. So you place your stop loss, just about at your buying price, or maybe just above it.
I think you have nerves of steel to be able to put 3 crore down on a single company to see the kind of gains that you are seeing right now, and I'm hopeful that this is a part of your portfolio, not the entire amount that you have available to invest and trade, Venkat, because you shouldn't be, well, I'm not going to give you advice. You have gains of 12 lakh. Who am I to give you advice? Let's talk about the next one. Suresh is calling in from Hyderabad. Hi, Suresh. Good morning. How can we help you today?
Hi, Alex. Good morning. I am holding Thomas Cook at 170, around 200 shares which I am holding. Can I hold it for long term, for next 1 to 2 years, and can I average it as it is bounced back from lower level?
Yes.
And shall I average it or shall I keep it for long term?
Okay, so let me go across to Shahina on this one. It's a pretty clear question. Thomas Cook, it's a play on the tourism space, on the travel space. Would you hold on to this, and what's the strategy you would employ?
Yeah, I suggest you can hold on to it. As Kush very nicely explained, that it is better to avoid averaging until it reaches a price level where you think valuations have started looking very attractive. So I don't think that current levels valuations have started looking very attractive because it is still expensive. If you look at price to book, it is still about 3 times price to book. If you see a multiple, P multiple is about 25 times. So if you want to average, you wait for some corrections and then you average. I would say closer to maybe 125 and odds, but as of now you can hold. It looks like it will do better going forward.
Okay, all right, so that's the view on Thomas Cook. Hopefully that answers your question. We've got one more caller that we'll take. Ray is calling us from Bengaluru. Hi Ray, good morning, and how can we help you today?
Yeah, hi, good morning Alex. Actually my query is on Shipping Corporation of India.
Okay.
I bought it during the budget announcement of maritime focus being given by the government. I bought it at 206 and it went down to around 139 in about a month, at which time I had averaged it, and it is now at 194. And there is a recent news now that they are collaborating with Container Corporation of India, and they are trying to build a bigger portfolio out of it. So just want to know the short-term and long-term view, if possible, about the future of the share.
Yeah, and you bought it based on the fundamentals. So you can hold Ray for the long term if you have to, right?
Yeah, sure.
Okay. So Shahina, on the fundamentals, this is a stock that is buzzing. I must admit that it was up about 5%, 4% earlier on when I looked at it at the start, and it was one of the stocks that was buzzing. But right now, pull up the intraday chart, it's at 12% higher. It's one of those stocks that is making a strong comeback. And so therefore, on the fundamentals, what's the view? What level would you look at 1 year, 2 years down the line?
Yeah, actually, if you see the numbers, they have actually shown a much declining profitability, over the last couple of quarters, and likely also to be the case over the coming quarter. But had the stock having given this big correction, of course, now it's recovering a lot. It's showing a very big bounce. But despite this, I think still valuations are just about 1 time price to book. Also, with the new tie-up that they'll have, it is likely that the stock will bottom from current levels. So I would say, having taken the loss that he has, it's better to hold for at current levels.
Hold. A quick view on this one, and then we hit the rapid fire round. Hemant is writing in from Tirupati asking about Sai Life Sciences. He's got IPO allotment, and so his price is 549. He's looking at the long-term prospects and wondering whether to hold. He's in the green China. Should he hold on?
Well, I'm not too much in favor of holding on to these stocks, small caps, and as well as in the IPOs for at least 1 year in the first year of its listing. So I would say it's better to take your profit.
Take your profit and exit. All right. It is time for the rapid fire segment. And Shahina and Kush, you know what this means. I'll toss as many questions as I can at you over the course of the next 2 minutes to keep your answers as quick as possible. KNR Constructions on the fundamentals, and we've got Tamil Selvan who's writing in from France and asking, should it be held on to or should you buy into this one for a period of 1 year or more? Shahina?
It is a hold as of now.
Hold. Z Entertainment, interesting note coming in today, and the stock was up and about. It continues to be. 130 is the buy price of Venkatramani. He's asking whether to hold for 12 months or add more. Kush?
Hold with a stop loss around 96.
Okay, CAMS has cooled down a little bit today after a sharp move yesterday. Gul wants to know whether it can be bought at the current market price for a period of 1 year. Kush?
Can be, but I think a better buy price would be 3625.
Marksons Pharma is the name of the counter. 290 is the buy price, and We've got Parsaran who's writing in and asking whether it can be bought and held for a period of 3 months. Kush?
It can be bought and held also. Stop loss would be 195.
Okay, Dixon is already something we've taken. Ola Electric and Zomato. Would you buy into any one of these, Shaina, on the fundamentals? Ramesh wants to know.
Zomato can be bought into in the base of fundamentals.
Okay. Castrol, not castor oil. Okay, okay. Vaishnavi wants to know about Castrol. Would you buy Castrol at the current juncture for a period of 6 months, Kush?
I'd wait. There's profit booking underway, but maybe closer to the 210 mark, it'll be a buy.
Okay. IDFC First Bank bought at levels of 80 rupees. The stock is currently at 55. Would you add more or would you hold, Shaina?
I would hold, not to add as at of current levels.
Okay, big loss in Polycab and KEI at 20,000 or thereabouts. Would you hold on? Shaina, is the move today overdone?
No, I would not hold. It's an exit.
It's an exit. All right. That brings us to the end of this segment, of course, and indeed the show. Shaina and Kush, thanks so much as always for joining in. Always a pleasure having you on the show. All right, and that brings us to the end of All You Need to Know. Not All You Need to Know, Ask Profit. I got my name wrong. But you know what this show was. This was Ask Profit. Thanks so much for watching. This is NDTV Profit.
He sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the trading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%,